Are you thinking about buying new machines, vehicles, or other expensive equipment for your business? In today's episode, we will talk about these assets. Stay with us.
Welcome, dear listener. You are listening to the Business Lessons in Denmark podcast. My name is Dezső Almási, and I'll be talking with Katalin Balog, accountant from Cool Accounts APS. Hi, Kati. How are you today?
Fine, thank you.
Have you been able to rest since the busy June?
Yes, thank you for asking. Yeah, I have rested, so I'm fine now.
Okay, I'm glad to hear that. In the last episode, we talked about deduction for low-value assets when buying drones, and we only briefly touched the high-value assets. How about we explore this topic more detail now?
No problem on my end. I'm very curious about what do you want to buy now?
Yeah. Last night I was late again. The camera was clicking all day, and by the evening I was thinking about replacing my camera gear. I also want to invest in some new lenses. First, because I work hard and I believe I deserve it.
Ah,
Second, it would help me develop my business further. And lastly, I could produce higher quality photos and videos.
I understand. There is no doubt that you work hard. It's getting more challenging to even find a time for us to record this podcast.
Yeah, that's true. But it's not just up to me. It's also hard to find free time with you. So
Yeah.
you are busy as well.
Yeah, that's true. By the way, I've been thinking about buying a new laptop myself because I think my current one is starting to have problems. But I'm trying to choose one that is below the 33,100 crowns limit, so I can deduct it as a low-value asset.
Yeah, that would be crazy if you bought a laptop for over 33,100. Luckily, you don't need to run a nuclear power plant.
No,
But I understand your example. Items costing less than 33,100 Danish crowns are considered low-value assets and can be deducted right away. Anything above that is classified as a high-value asset, and its cost must be spread out over several years.
Yes, exactly.
And I know also that if I buy cameras and lenses together, I need to combine their value because they can only be used as a set.
Yes, exactly. Summarized the previous episode very well. And are those cameras really so expensive that they exceed the threshold for the low-value assets?
Well, the entire set is around 90,000 Danish crowns.
Wow, that really does qualify as a high-value asset then. It reminds me of the saying that men differ from children only in that their toys are significantly more expensive.
Yeah, there's some truth to that. I've heard it from my wife too.
All right. But getting serious now, since we are talking about high value assets today, let's explore the different types of these assets to get a broader picture.
Okay, I'm all ears.
There are more types of high value assets. The first, as we discussed already, are tangible assets. This can include your cameras and lenses, but also significantly higher value items like real estate, machinery, IT equipment, and so on.
Mhm. Does the company car fall into this category? Am I right?
Yes, right.
Mm.
That's a very good example, as company cars are typically one of the most common high value assets for businesses. The second type of high value assets is intangible assets. In other words, anything that cannot be physically touched or is not money yet holds significant value.
Intangible assets or assets that cannot be physically touched. I'm not sure what these could be.
Intangible assets could include things like patents or trademarks. These are not physical items that can be touched, but having a trademark, for example, can be valuable because it gives you exclusive rights to market your product. If you brew beer as a hobby, for example, and develop a beer brand, which has become quite trendy in recent years, with hundreds of micro breweries in Denmark, you can't call your beer Carlsberg because there is a trademark on that name. The fact that Carlsberg has this trademark represents significant value for them, even though it's something intangible.
Okay, I see. Clear now. So, because this is something of high value, it should also be seen as a high value asset. And what's the next type?
Yeah, exactly. The next type is invested financial assets. This could include long-term investments, equity stakes, and similar financial instruments. This is probably more relevant for larger companies than sole proprietors.
Okay, I see. So, if I had a holding company and it invested in other companies, that investment would fall into this category.
Yes, exactly. We had a separate episode before where we talked about holding companies. I don't remember the episode number, but its title was How Does a Money Tank Work? You can find it based on that if you want to listen to it again.
Okay, thanks for info. So the main point is when I have such a high value asset, whether it's a tangible thing or an intangible thing, I need to keep track of it individually.
Yes, that's right. And the other important thing we discussed earlier is that these assets cannot be deducted all at once, but need to be spread out over several years.
Okay, I understand that actually deducting such a large investment all at once would ruin my company's profit for that year.
That's right, because these assets would wear out gradually over several years. The accounting must reflect that as well.
Okay, I understand. So if I buy that complete camera set for 90,000 Danish crowns, my taxable income won't decrease by 90,000 Danish crowns in this year because of it.
Yes, that's correct. For the camera set, you can only reduce your taxable income each year by 25% of the purchase price.
I see. So it takes 4 years until it can be fully deducted as a cost.
Yes, exactly. By the way, there is a lot more to talk about how to do this cost deduction over multiple years, as there are quite a few details to consider, but I don't want to complicate the podcast too much. If someone is interested in more details, they can research further or ask us questions. The key is that it's good for you as a business owner to know that these types of assets do exist and how to account for them.
Yeah, well, I think it's a good idea to consult with an accountant before making such major investments.
Absolutely. And it's also worth doing financial planning as these kind of investments cost a lot of money.
That's for sure. Well, Kati, it's good that we discussed this topic too. I'm looking forward to talking to you again next week.
Me too, Raja.
Today's episode was sponsored by Cool Accounts APS. If you want to take your business to the next level, then contact us through our website www.accounts.cool. And for up-to-date and useful information, follow our Facebook page. We wish you a successful week.